Hey guys, welcome back to another video for FAR 1. Here we're just going to go over the retail inventory method for Chapter 9. I'm not going to go into too many details about this. This is one of those topics in the class where the conceptual underlying of it is a little difficult to explain. It's mainly used based off of the name, you could probably guess, right? It's used by a lot of retailers. Potentially like, I'm not sure if Walmart or Best Buy or companies like that use it, but that's a lot of companies that are like that would use this method. Okay. And so I'm just going to give a few tips here of how to solve this one, of how to deal with retail inventory method. Basically what I would say is this is one of the few areas in the class where you kind of just have to memorize the differences between the conventional and the average cost method. And then there's other methods as well that are covered in the appendix. You might have to know that, depends on your professor. That's the last one. You kind of have to memorize the items that are above and below what they call the line. It's the cost to retail ratio is what it's called. I just have it written as line there, but it's called the cost to retail ratio technically. And basically, this is one of the areas where you have these two columns, one's cost, one's retail, and then you have all these line items. And you kind of just have to go through and memorize, okay, markups are above the line or below the line, or markdowns are above or below or wherever they are. And so you just have to make sure that you've covered all that. The other thing I'll point out is on page 463, those are some of the harder items for this topic. You still are responsible for those. Make sure you know them all. They all are fair game on an exam or a quiz or anything you might be asked to do. So just make sure you've kind of gone through those and you know whether or not those are required to be above or below the cost to retail ratio, and whether or not they go in both the cost column and the retail column or whatever the case may be. So those are my main pointers on this topic. But yeah, so basically the other thing I'll say is just the rationale for using this method. A lot of companies, the reason they use this method is because they know what their inventory sells for, but they don't necessarily know what they paid for every single piece of inventory. And so what they're allowed to do is kind of figure out, okay, like my inventory cost is a certain percentage of the retail amount, and then they take the retail amount, how much they're selling it for, and they multiply it by that cost to retail ratio, and that's how it converts it back into cost. So as an example, like let's say that, your cost, let's say your inventory, you're selling it, it's a $100,000 sales value if you sold it today, and your cost is 40% of that retail sales value. That means that you would take the 100,000, multiply it by 40%, and you'd get $40,000 as your ending inventory at retail. That's the cost of it. And so that's kind of the whole idea of what you're doing conceptually. Other than that, I would just go ahead and do your best with it. A lot of this stuff kind of is just honestly, some of this stuff is just memorization. It's kind of hard. It's a little bit arcane. It's a little bit strange as to why, to a certain extent, things are above or below the line sometimes. But yeah, so that's my suggestions and my tips. Good luck, guys. See you in the next video.